Welcome to the News El Salvador SV podcast. In this space for conversation and reflection, where we explore current topics from El Salvador and the world together. Find US on your favorite platform. Search for us as News El Salvador SV. You can make your contributions through PayPal, and we have now enabled a link if you wish to support us through other means. Invite us to a coffee, leave tips, leave a review, communicate, subscribe, find information about the podcasts we are publishing, and other information. You'll find the link in the description of this content. Check it out. You can make any comments there, and it has many functions that you might find interesting. Remember to follow us, share, and comment. Thank you very much. For this deep dive, our mission is to really unpack the week's biggest headlines, both here at home and internationally. We're trying to go beyond the surface, to analyze the facts and the data that are shaping our reality. We're going to start right away with a major national story where the narrative of security in El Salvador seems to be, it's directly tied to some very real economic effects.
It absolutely is. I mean, that relationship between a sense of physical security and actual economic behavior is probably the foundational story in El Salvador at this moment.
How so?
Well, when the threat of violence goes down, it almost immediately creates this foundation for consumer confidence. It lets local commerce start to breathe again, to thrive, even while the nation is dealing with some pretty complex fiscal issues.
We have data to back that up. The National Civil Police just reported that this past weekend. That's Saturday the 22nd and Sunday the 23rd of November. It ended with 0 homicides.
And that aligns with President Bukele's core argument, doesn't it? He's consistently said that a strong police force and firm prisons are the non-negotiable bedrock of a safe society.
Right, and you can see that, or at least reports suggest you can see it on the ground.
Exactly. We're seeing reports, for example, from San Vicente. They're experiencing observable growth in local tourism and their general economy. And this isn't just a coincidence, it's being directly attributed to this new security environment.
Even community leaders are noticing.
That's right. Representatives from the evangelical church have actually been publicly highlighting this. They're noting that the community just feels significantly safer.
So that's the local picture. But what about the macro financial foundations? What's keeping the wider economy stable?
The anchor, as it has been for a long time, is remittances. The Inter-American Development Bank, the BID, has a really robust forecast out.
And what's it saying?
It's projecting that remittances are on track to surpass a really staggering number. $10 billion in El Salvador by the end of 2025.
10 billion?
10 billion. And to put that into perspective, that means this one country accounts for about 18% of all remittances flowing into the whole of Central America. It's a critical stabilizer.
So that stable inflow is the base. But on top of that, we're seeing some, almost explosive movement in certain domestic sectors.
You're talking about construction and real estate. Absolutely. The National Registry Center, the CNR, it registered, get this, $37 billion in real estate movements. At the same time, construction-related services have grown by 50%.
That's massive growth.
It is. But it's actually creating an interesting problem. This kind of rapid expansion is causing a bit of a crunch. Companies are now demanding much more specialized labor just to keep up.
Okay, so that's the growth side. But we have to introduce the other side of the ledger, the structural challenges, and there's a big one weighing on the government's balance sheet.
The pension debt.
The pension debt. Reports show the government's debt to its own workers hit $11.241 billion as of October. What does a number that large actually mean?
It's a massive future fiscal burden. I mean, simply put, when a government accrues that much pension debt, it's banking on future tax revenues to pay for promises made today.
And for the average worker.
For them, it creates uncertainty about their own retirement. And for the government, it severely ties their hands for future investments in other critical areas like, health or education.
And this complexity exists at the micro level, too. I'm thinking about the reliance on informal financing.
Precisely. Micro and small enterprises, MIPS. They obtained about $1.251 billion from informal lenders. This highlights a persistent vulnerability in the system.
Because they can't get formal loans.
They're struggling to, yes. So these small businesses, which are the real engine of local employment, have to turn to informal lenders. And those lenders, they charge much higher rates and offer basically no protection, which just increases the financial fragility of that whole sector.
On the political front, a couple of quick administrative updates. The Supreme Electoral Tribunal, the TSE, is already looking ahead. It's requesting an extra $8 million for the 2027 presidential election.
And we are seeing some positive movement in the justice system. The Attorney General's office, the PGR, reported a significant jump in efficiency. Conciliations and mediations went from around 14,000 to over 24,000 in just 2 years.
So faster dispute resolution.
Which is a clear benefit for citizens, yes.
But then there's a legislative change that's causing, well, a lot of concern at the community level. A new law is transferring control of the ADESCOs, the Community Development Associations, over to the CNR.
And this is a very complex shift. ADESCOs are, they're the cornerstone of grassroots democratic control. They manage local funds, they start community projects.
And now that control moves to a central body.
Yes, and the concern from community groups is that this opens the door to potential dissolution or politicization of these groups. It essentially strips away local autonomy and centralizes decision-making power.
We want to take a moment to remind you that if you find value in this analysis and in-depth exploration, you can support our work. You can make contributions through PayPal or use the Bitcoin QR code, and we encourage you to check the link in the description for more ways to support us and learn more about this deep dive.
Let's shift gears now to the global markets. The major story this week is a really significant and sudden shift in risk appetite.
Especially for volatile assets, right?
Exactly.
Right.
Like cryptocurrencies. The recent surge we saw in Bitcoin, Ethereum, XRP, Dogecoin, it wasn't really driven by anything happening inside the crypto world. It was all about macroeconomic data coming from the United States.
Okay, so let's unpack that. What specific news from the United States was powerful enough to trigger a rally like that?
It was crucial, weak economic data. Reports showed that business activity in the United States slowed down quite a bit in July. And the most critical piece was a key measure of services activity. It actually contracted for the first time in 2.5 years.
A contraction. That's a big signal.
It's a huge signal. It told the market that the U.S. economy, which has been so resilient, might finally be cooling off.
And whenever the market senses a cooling economy, it immediately starts to anticipate a response from the Federal Reserve.
Precisely. The expectation of a cooling economy dramatically increased the probability of an interest rate cut by the Fed, maybe as soon as September. According to CME Group, traders are now pricing in about a 75% chance of a rate cut.
And lower rates make riskier assets more attractive.
That's the dynamic. Borrowing becomes cheaper, and speculative investments like crypto look a lot more appealing compared to, say, holding bonds. That's the direct link. That's why crypto shot up.
But even with that rally, the volatility is it's still extreme. I mean, Bitcoin was recently trading between $86,000 and $88,000 after bouncing off a floor near $80,000, but another source had it closer to $58,000 just a few days before.
The swings are incredible, and they underscore that caution is still the word of the day. The Crypto Fear and Greed Index. It's still firmly in fear territory, sitting at a low 28.
So there's a disconnect between the price action and the sentiment.
There is. And what's really complex is that even with these positive macro signals, the market is bracing for a disruption from a very old story.
You must be talking about Mt. Gox. For listeners who might not remember a decade-old collapse, could you give us the context?
Of course. Mt. Gox was the world's biggest Bitcoin exchange before it collapsed spectacularly back in 2014 after a huge hack. For a decade, the creditors who lost their Bitcoin have been waiting to be repaid.
And that repayment is finally happening.
It's expected to, and that's the source of the anxiety. Analysts are warning that this recovery could be very temporary because the market is terrified of a potential mass sell-off of tokens by these creditors, which could create a supply shock and derail all this momentum overnight.
So, moving from crypto to another hot tech sector, AI. The investment boom continues, but it seems to be creating a real split among some of the heavyweights in finance.
It's a fascinating debate, isn't it? Is this explosive growth in AI built on solid, sustainable fundamentals, or is it just speculative enthusiasm?
Then who's on which side?
On one side, you have Michael Burry, famous for seeing the 2008 crisis coming. He's warning that major tech companies might have inflated gains. He suggests their valuations rely too much on future speculation and that a major correction is a real possibility.
A bubble, in other words.
That's his implication, yes. But then, in stark contrast, you have Steve Eisman, another key figure from that same crisis, who offers a powerful rebuttal.
And what's his argument?
Eisman argues the AI sector has incredibly solid fundamentals. He connects the growth not to hype, but to real, tangible investments in infrastructure, in hardware, and automation. For him, this isn't a bubble, it's a profound technological shift, and he thinks the growth potential might still be underestimated. Let's
transition from financial markets to geopolitics, where security tensions are. While they remain very high across several flashpoints, we can start in Venezuela.
Yes, the official classification of the Cartel de los Soles, a group with direct links to Nicolas Maduro as a terrorist organization, that's a serious escalation. It's a major geopolitical move.
And Venezuela's response was, as you'd expect, pretty swift.
Oh, absolutely. Caracas officially rejected the designation. They accused the United States of essentially inventing the group as a pretext to justify a potential intervention. So the conflict there intensifies.
Now, moving over to Asia, Japan is taking some very concrete defensive steps because of rising tensions with China.
They are. Japan announced the deployment of Chusam medium-range anti-aircraft missiles on Yonaguni Island.
And the location there is key.
It's critical. Yonaguni is only about 70 kilometers from Taiwan. This deployment signals a heightened state of readiness. Japan is being very explicit that this is to reduce the risk of an armed attack.
And in Eastern Europe, the complex negotiations over the Russia-Ukraine conflict drag on. Washington and Kiev are both affirming that any peace deal has to maintain Ukraine's full sovereignty.
Right, but there are some huge sticking points. While Ukraine insists on its full integrity, Russia is demanding concessions, particularly Ukraine not joining NATO and questions around early presidential elections.
And there's skepticism from outside as well.
There is. Former United States President Trump has publicly questioned whether these talks are really making any significant progress, which just adds another layer of international doubt to the whole process.
And on the ground itself, militarily?
Reports indicate that Russian troops are completing the clearing of Pokrovsk. With Myrnograd now effectively cut off, we're seeing reports of a collapse of the enemy's defense in that specific sector.
Okay, let's bring it back home and talk about some domestic infrastructure and also global crime, starting with these persistent issues around the Chivo wallet. The failures being reported seem to contradict the entire promise of the technology.
This is a major issue because the whole premise of Chivo and the country's entire digital currency strategy, it rests on the speed and agility of the Bitcoin blockchain.
But that's not what's happening.
No. Reports are detailing these fundamental errors, like users being unable to reliably send Bitcoin to other wallets. That failure strikes at the very core principle of what the technology is supposed to do.
And what's just as concerning is the reported customer service response. It seems call centers are just telling users to uninstall and reinstall the app.
Which is hardly a solution, is it?
Yeah.
It speaks to significant, unaddressed technical problems. When the official fix for a core banking function is turn it off and on again, it raises really serious doubts about the long-term reliability of the platform.
And finally, on security, we have a story on transnational crime that shows how organized threats from South America are embedding themselves deep within the United States.
Yes, authorities in San Antonio, United States, made a key arrest linked to the Tren de Aragua organization.
Who was the figure?
A man named Luis Amador Castillo Hernandez, also known as El Oriente. He was arrested after the FBI made controlled buys of cocaine from him. He wasn't just selling drugs, he was allegedly controlling the club where this was all happening.
And the operation was much bigger than just him.
Much bigger. Over 140 people were detained in total. This included people with known criminal ties and even Honduran citizens who'd been previously deported. It just demonstrates the complex, sprawling international web of crime that governments are now fighting on their own soil. So as we pull all of this together, all the information from this deep dive, I think three main conclusions really stand out for understanding the current environment.
Okay, let's hear the final takeaways.
First, on the macrofinancial front, global risk appetite, which is being driven almost entirely by the potential for interest rate cuts in the United States, is the key short-term mover for volatile assets like crypto. But, and this is a big but, this optimism exists despite huge underlying risks, like the Mt. Gox situation, which could cause a sudden supply shock.
Okay, that's one. What's the second?
The second is the security economy connection in El Salvador. The improved security environment is clearly translating into real, tangible economic growth in local sectors. It's also stabilizing critical inflows like remittances. Nevertheless, the nation's massive debt, especially that $11.2 billion in pension obligations, remains a colossal financial challenge that limits future options.
And the third and final conclusion.
That the geopolitical landscape is incredibly tense and complex. You see it exemplified by Japan's defensive missile deployment near Taiwan. You also see it in the friction-filled negotiations over Ukraine's future, where fundamental issues like sovereignty are still major hurdles, notwithstanding all the efforts toward peace.
We've covered a huge amount of ground today, from the technical failures of the Chivo wallet to the fundamental debate over the value of the AI form. It's been a very insightful deep dive. Remember that you can help us with your financial contributions through PayPal or the Bitcoin QR code, and by sharing the content of this deep dive with others. Be sure to check the link in the description for more ways to support us and learn more about our ongoing work. Thank you very much, and until next time.